Welcome to C&N Vantage Point. I'm Craig Morgenstern, Senior Investment Officer with C&N Wealth Management, and today's podcast will provide a market review for the month of May 2025 and our current outlook. Consumer confidence rebounded in May, with the Conference Board's index marking its first increase after 5 months of decline, driven by easing fears over aggressive tariff policies and a 90-day pause in the U.S.-China trade deal. The U.S. economy faces cooling momentum and continued uncertainty, as first quarter real GDP contracted for the first time since early 2022. Softer government spending and an uptick in imports prompted analysts to revise their annual growth projections. Inflation continues to ease as core inflation slowed to a 4-year low of 2.5%. However, concerns of rebounding price pressures remain as Walmart's plans to raise prices due to tariffs on imported goods and the White House plans to appeal recent court rulings on broader tariffs. The Federal Reserve kept its benchmark interest rate steady at 4.25 to 4.5%, taking a cautious wait-and-see approach, with market expectations for rate cuts if major tariffs are avoided and inflation continues to decline. Financial markets showed measured optimism. The S&P 500 is holding above its 200-day moving average, near 5,900, and the NASDAQ and Dow continue their recent upward trend. Bond markets are complacent of late as yields easing and the Bloomberg U.S. Aggregate Bond Index marking its best start to the calendar year since 2023. Labor market signals remain mixed, with the unemployment rate holding at 4.2%, while jobless claims and unemployment duration rose modestly. Investor sentiment remains fragile amid ongoing uncertainty from trade policy, fiscal legislation, economic growth, and the Federal Reserve's next moves. Driven by easing tariff impacts and renewed momentum in the U.S. technology sector, the U.S. markets posted their best May performance since 1990. Despite strong first quarter corporate earnings, projections for full year 2025 and 2026 have been revised downward, with many companies cutting or suspending guidance. While inflation and labor markets remain stable, these indicators are often considered lagging. Looking ahead, economic uncertainty stemming from fluctuating tariffs and cautious corporate and consumer behavior is anticipated to slow the U.S. economy for the remainder of 2025. Given current equity valuations and the recent market rebound, our investment team is preparing to adjust portfolios back to a neutral stance. Our upcoming portfolio adjustments reflect a cautious approach amid economic and policy uncertainty. The resultant portfolio will retain a slight value tilt to U.S. equities. Within international equities, we'll shift to favor quality growth characteristics. We'll retain an overweight to fixed income relative to alternatives to preserve flexibility for targeted trades should the equity market experience significant pullbacks. We'd like to remind our listeners that market conditions can change quickly. As facts and circumstances change, C&N's market views and portfolio positioning may change as well. If you would like more information about our current positioning and market thoughts, please contact any of our wealth management advisors. And if you like this podcast, we'd be grateful if you would share it with your friends. On behalf of the entire C&N Wealth Management team, we thank you for listening.
Please note, views are subject to change based on market conditions and other factors. These views should not be construed as recommendation for any specific security or sector. Client portfolios may or may not be at the positionings discussed due to, but not limited to, distributions, tax management limitations, systematic purchases, etc. Some products are not FDIC insured or guaranteed, not a deposit or other obligation of the bank, not guaranteed by the bank, and are subject to investment risk, including the possible loss of principal amount invested, and are not insured by any other federal government agency.